I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities, the bonds.
No one did it before us, so we were the first company who tokenized the Sapphire collection.
Welcome to XXIM podcast, where we dive into the cutting-edge ideas on decentralization, blockchain, and the new monetary systems.
Welcome to XXIM podcast, and I'm your host Ankit. A new buzzword has arrived on Wall Street. It's called tokenization of assets, and Wall Street is rushing towards it. Bloomberg and others are predicting this market to be in tens of trillions by 2030. So in this episode, I sat down with Steven from Toto Finance, first ever project to tokenize diamonds on chain, and now they're expanding to other commodities. As geopolitical tension rise and economies get weaker, we see commodities become a safe haven. So I sat down with Steven to discuss this exciting new world of commodities on chain and to show you the demo of Toto Finance's product.
Supported by IGRA Labs, Atomic Programmability on a Casper blog tag. Cascade. Use your Casper without selling it.
Today, I'm joined by Steven from Toto Finance. Good to have you over, Steven.
Hi, Ankit. Great to be here. Thanks for having us.
Awesome. Steven, I wanted to have you over to understand and discuss this massive shift that's taking place with tokenization of assets and why it's becoming such a buzzword on Wall Street, right? From BlackRock to Goldman to Treasury Department, it seems everyone is rushing to tokenization, right? So let me ask you this thing first. Why rush this time? Typically Wall Street moves slow, but this time it seems everyone is rushing towards this tokenization trend.
I think, first of all, it's not that fast. If you look at the past, I think, first of all, tokenization started with tokenization of money. And basically, if you look at the US dollars that has been tokenized as USDT or USDC, the two major tokens that we know out there, they're here already since a long time. And they are helping, of course, a lot of businesses, banks, and big asset managers to basically create a settlement, instant settlement, those rails. And this was the first form of tokenization. Maybe we didn't call it that way at start and in the beginning. Today, yes, and it's obvious. And by the way, it's the largest market into tokenization. We're talking about a 300 billion market, majorly Tether around probably 180, 185 billion. Then Circle with USDC just below 100. And then you have all the others following up. And I think the major shift started in 2024. When BlackRock announced that they will be issuing like a Bitcoin ETF. I remember it was just before Davos in 2024, around the first week of Jan.
The IBIT ETF, right?
Yes. So there were ETFs already, but in the US, it was the first one. And I think this gave quite the green light to everyone to say, okay, if the big guys and the biggest asset manager worldwide is doing it, and it means it's okay to go that way. And what followed up was quite fast. This I agree. The 11 or 12 other massive asset managers followed up and created ETFs on Bitcoin and then later on other kind of assets. Even today, you can see other assets.
This statement you made, I think that, it started with USDT or, USDC stablecoins as a trend of tokenization. That's very unique. I think it's an interesting perspective, I must say.
Yes, I think, by the way, Tether is launching their own US-based stablecoin as well. So I think the Genius Act also, and that's maybe also a part of the answer. I think everything that is related to regulation, to support of the government with the Genius Act, and now we're talking about the Clarity Act. I think this gave a boost and a pump to a lot of companies, first of all, to establish over there and to look at capital in the US, because at the end of the day, we can criticize US, we can think whatever we want about US, but it's still the biggest market. And I think, yes, this gave a certain facilitation. Now, to get back to your initial question and why commodity and why is it so hot? Of course, we are look at the world today. We are in very unstable world. A lot of wars happening, and now, by way of speaking, there's a massive war happening here in the Middle East, and I think it's not only people living in the Middle East that are touched, but basically the whole commodities world is touched. And I think something we already felt like 6 or 8 months ago with the ongoing war in Ukraine and Russia, of course, commodity prices, which are always been a hedge or a hedge against inflation, of course, but also a safety or a safe haven in time or period of crisis. And I think this is what's happening, basically. And now, to more specifically on commodities and what we saw over the weekend, for example, the oil prices jumping to the roof, this is really related to the Strait of Hormuz, which is just below Iran, and basically all the ships are navigating with gas to Asia or to countries in Asia, to Russia, to China, etc. And I think this is creating a lot of friction, and that's why we see crazy prices over there.
Did you see oil prices actually, WTI jumped to 119 today? Earlier today, I was looking at it, and it's insane. I think, geopolitically, I think it's very unstable right now. And obviously, it's showing in commodities. We've seen gold and silver. I do have a question specifically on those assets. But oil, I think, is definitely showing very interesting signs. And I think, as you say, there are some weaknesses showing up across the globe, but commodities, obviously, an asset people are rushing to. That's clear. One quote I came across from DTCC, right? It's from DTCC website. The way they explain tokenization, right? Tokenization is not just a trend. It's a long-term evolution. It modernizes financial infrastructure, enhances liquidity, and enables real-time settlement, right? So this is, people might not have heard of DTCC, but they are one of the biggest, they are the biggest clearinghouse, depository trust and clearing corporation, right? They clear $10 to $12 trillion a month, and they are rushing to tokenization. So I think it's a topic for, if you're in crypto, if you're just overall finance, I think you must learn about this trend because it's not stopping.
Absolutely. I think you mentioned two interesting points here. So instant settlement, of course, this is the advantage of tokenization. If you look at the commodities trade in general, some settlements can last between 5 to 20 days. So just imagine to have the clearance of your payments done and wait for 20 days to make sure that the other part has received that. I think the beauty of tokenization already is one of the things it's solving. It's solving a lot of other stuff, and we'll get to that later. But just to mention them because it's important to tell that. One is the getting rid of all the middlemen. When you are selling, let's say, stupid example, but coffee out of Indonesia, and you want to bring it to Cambodia, or you want to bring it to the other part of the world in Chile, for example, how many middlemen are in between, how many people are taking cuts, and at the end of the day, the end user is facing increased price. And now with tokenization, we can basically limit those middlemen and connect directly the producer to the end user. And I think that's also one of the beauty of tokenization.
Yeah. I typically say AI gets a lot of coverage, but for me personally, I think tokenization is a bigger trend, and if Wall Street is running to it, it's something you have to pay close attention to it. So let's come back to Toto Finance, right? So Stephen, right? Toto Finance is playing a pivotal role in the tokenization of commodities. You touched upon it. So let me ask you, just briefly, how do you explain Toto Finance to your family? How do you simply explain to people that are not aware of crypto, not aware of anything we're going to discuss rest of the episode? But how do you tell them what Toto Finance does?
So basically, Toto Finance, just for the knowledge of everyone, we started in 2023. Formerly, it was named Diamonds, Tokenized Diamonds. And we started like this because we wanted to disrupt an industry. And the diamond industry, which is an industry that is very old-fashioned, traditional, etc., has a lot of problems, problems of transparency, of traceability, of instant settlement as well. And I think what we brought to the table is to build a marketplace that will be listing digital twins of those real assets and make it possible for anyone worldwide to be able to purchase an asset, to trade it, but ultimately also to redeem the physical asset. And the infrastructure that we built previously with Diamonds, today with Toto Finance, was really to make it available to anyone worldwide to be able to access those markets that were previously only accessible for a minor portion of the population. And I think this is how we started. We expanded after that because, as I said, we have the infra, the legal, and a functioning marketplace. We said, okay, why not do it for gold? Why not do it for silver and platinum? And this is where we were last year. So having a lot of different assets on a B2C marketplace. And now Toto Finance is even bringing it to another level. And we are expanding our offering to institutional offering. And I'll speak a bit about that. Just to mention one word, we are tokenizing, and what we found out is basically miners, like real, not Bitcoin miners, but the
Not
real
Bitcoin.
commodities,
Yeah.
are facing capital. It's very capital intensive. In order to operate a mine and to make it active on a daily basis, explore and extract and refine, and then have the final product to be ready to ship to the masses. First of all, it's a very long process and it's very capital intensive. And with tokenization, what we found out, we could basically tokenize in-ground assets being inside a mine before extraction and basically bring capital to those miners. And this is what we're busy with on the institutional part of the business. Okay.
That's beautiful. That's beautiful. So let's take a step back. You know, while everyone is rushing to financial assets, right? Like with JPM's money market fund, Biddle with, BlackRock with Biddle. Like while everyone is rushing to financial assets, you ran to commodities. Why diamond? Were you in diamond business first? Like were you, in that business before and you saw the opportunity? But why start with diamonds?
Yeah, absolutely. So I was born in Antwerp, Belgium, which used to be the capital of the diamonds for the last 400 or 500 years. Today, it's in India, it's in Mumbai and Surat. They took, let's say, a big part of the business over. But I used to work in the diamond industry, and of course, we were facing payments issues, of course, traceability, and basically why traceability? Because a lot of customers wanted to know where their stone is originated from. So the fact of just saying stone is coming from Botswana or from Russia or from whatever country, it's not enough today. It's good to say it, but you need to prove it. And the only way to prove it was blockchain, basically to trace the asset from the origin till the end user. And that's about traceability. And then there was also transparency issues, and there still are in the diamond industry. You don't understand, for example, if I come to you and I want to purchase a diamond, why should I pay a certain price? And if I go to your neighbor, he will have a total different price for the same asset. And basically, we wanted to bring transparency on pricing as well. Also only possible, not only, but also very possible through blockchain.
I see. So you come from that industry. You saw a hole, I guess, a gap in the market, and obviously with blockchain, you think you can do it better. So VeChain, like first, I think company that came to my mind, VeChain has been on this mission for a long time, right? They've been trying to tokenize assets, and I know they've tried to work with some of the expensive luxury clothing brands, like Louis Vuitton. Again, I might be getting it wrong, but they've been on this mission, right?
So basically, yeah, of course. I think the VeChain did a lot of collectibles, as you mentioned. And I think the example that you gave, and I'm not sure it's VeChain, but Tiffany did a project with CryptoPunks, where you could have your Tiffany necklace with the number of your punk, etc., as a finalized jewelry or finalized product. And I think it was a fine and cool idea. What we wanted to do is really to disrupt the industry. We don't want to change the industry. We just want to add value to an existing traditional non-functioning industry, and trying to add value to make it more reliable, to make it faster, to make it grow as we think we can do. And now, basically, the diamond is a very good example. Diamonds have been traveling for hundreds and hundreds of years. It's easy to transfer, easy to ship, easy to store. You don't need like a huge warehouse. You can have it in a drawer in your bank, and it's easy. And so basically also to tokenize it, because you have a lot of parameters. By the way, every diamond is unique. You don't have the same diamonds. And basically, every diamond, or not every diamond, but the diamond that we are working with, all have a GIA certificate. The GIA is the Gemological Institute of America, who basically looks at the diamond and the properties of the diamonds and gives, and it's like a passport for us, where you have your name, your birth, your date of birth, the location, etc. You have the same in a GIA certificate for a diamond. So you will have the shape, the weight of the asset, the color, and the clarity of it. And basically, with all those properties, this we can use as metadata of the tokenized asset, and people can trade it and can understand that, yeah, that is exactly the digital twin or the ownership deed on chain of that physical asset.
I see. And does that apply? I mean, I had to learn a little bit about diamonds when we got engaged. I had to learn a little bit about diamonds a couple of years ago. And one thing I did not know actually before that was, there are lab-grown diamonds, and then obviously there are like real mine diamonds, right? And so I'm assuming the same process applies to both, or it's different. Like for lab grown, these certificates don't apply. It's only for the real mine diamonds.
No, so you have both. You have similarities on both. The huge difference is that natural diamonds, what we are working with, first of all, are investable. So those are investable assets. Synthetic diamonds have no resale value. At the end of the day, if you ask for someone to invest in diamonds, his resale value will be nearly zero, or a few cents or a few dollars. So we didn't see any opportunity over there. So we wanted to go to investable diamonds. Today we have over 30,000 diamonds on the platform, and I think we are serving really beautiful assets, but serving every kind of budget. So when people tell me, yeah, but diamonds and it's expensive, etc., yes, it can be expensive. Like a car, for example, you can have a Rolls Royce or a Ferrari or a Lambo, as we say in our industry, but you can also have a smaller car with no electric windows, no leather inside, and same applies for diamonds. So we start basically on the platform. You can find us at $450, and you have already an investable grade diamond at this price. It's tiny, but it's beautiful.
Right. I see. That's cool. So you started with diamond, and then now you're obviously doing other commodities, right? Are you doing gold? You've started silver. You're copper, I believe, as well. How many commodities you've added outside of diamond?
So we added 4 different assets between 24 and 2025. So gold bars, silver bars, and platinum bars. And then we also added sapphires, very rare sapphires coming from Sri Lanka.
Crazy. So I'm assuming you're picking these assets based on certain data you have that people are looking for this, or how do you add these? How do you choose these assets?
Yeah. So in the case of the sapphires, first of all, no one did it before us. So we were the first company who tokenized the Sapphire collection. We did it in partnership with a Geneva jeweler, Elke Bear and Partners. And basically, they had the opportunity to source Sri Lankan non-heated sapphires. So those are very rare assets, and they occur only for 2% of the whole sapphire industry worldwide. And so we picked that because, first of all, they came to us, they were interested in tokenization. And we said, yes, why not? We did it. We sold a few assets. There are still a few for sale on the platform. But the beauty of the project, I think, is we added a social impact or a social layer to it. So what is that social layer? So for every asset or for every sapphire that is sold on the platform, a portion of the revenue is going back to Sri Lanka to support education for children. Because the starting point for this project was to say, okay, we are sourcing assets in a certain country, which is not a very developed country. They have beautiful mines. People are working hard to get those assets out. But at the end of the day, it's Europeans or US making the money out of that. And we wanted to share a portion of that back to the country and giving back to the community. And I think it's a beautiful thing that we did.
Beautiful cause. And in terms of the cost of these sapphires, like what is the maximum, how far they can go, these sapphires? Like,
so of what I've seen when I was in the diamond and jewelry industry, I saw like crazy stones that are auctioned at Sotheby's or Christie's, and you can just imagine it can go to the roof, like $1 million for a stone, depending on the intensity of the color, on the story of the stone. What we have on the platform, even though it's a very rare collection, we wanted to have it to start at the lowest price for sapphires. So let's say between $5,000 and $6,000. And I think the most expensive stone that we have, it's a bigger stone. It's like an 8-carat sapphire, and I think it ranges around $60,000 or $70,000.
Let's get into the technology and like the real things that underpins this whole infrastructure, right? So I guess what is the process of tokenization of commodities, right? Like financial assets, I get it, right? I think most people will get it easily because it's easy to understand. On commodities front, right, there is a lot of process. I'm assuming here there's a verification, there is a storage, there's trading part of it, there's digitization part of it. So take us through, what is the process that you go through it?
Yeah, so basically we are first looking at assets that we want to purchase because we think there is a demand for that. Like I said, investable diamonds. So we will be connected either directly to mines in Botswana mainly or in India, and or to the first hand after the mine. Because coming from that industry, we still have the contacts, and I think we can get quite attractive prices on the stones that we are looking for. Once the purchase has been done, and we only purchased polished diamonds, so they are already cut, there is a certificate attached to it, so we can check that the stone is matching the certificate and vice versa. And we send the asset to Liechtenstein, where our partner is located there, LCX, which is the Liechtenstein Crypto Asset Exchange. And basically they have one license, which is called the physical validator. Just to simplify it, the physical validator is like a notary that connects traditional assets and proves, authenticate, validate the asset in order to bring it on chain. So once this verification and authentication has been done, we take the asset and we put it in a facility vault. It's like a bank, a security vault, where the assets are held. It's a third party, so it's important to say that it's not us who are holding physically the assets. It's really in a third party. And once this has been done, we are adding an insurance on every asset. It's Lloyd's Insurance of London that is added. And then basically we are digitizing or creating a digital twin of that asset. A one of one, so for every diamond or for every gold bar, we have one NFT that is created that is basically put on chain on Ethereum. And then it is placed on our marketplace. And so anyone who connects to the marketplace, who wants to purchase the asset or only to see or to look at the assets, are able to look at the assets, then either purchase the asset. And then basically it's like on every marketplace, you can either trade the assets, you can keep the assets, you can gift the asset. But ultimately, I think that's the huge difference with physical hard assets. You can also redeem the physical asset. And so if someone wants that stone, we had a beautiful story. There was someone who purchased one of the first diamonds on our platform. And at a certain point, he wanted to propose. And so he said, look, I don't have a diamond, but I have tokenized diamonds. Let me redeem it. And so we invited him to Liechtenstein. We gave him his stone, and then he proposed, and the rest is history. Hopefully they're married now and with 7 children. I don't know. But it proves it works from start to finish.
Yeah, that is a beautiful story. Because I think I was just thinking, it's sort of what we're discussing here is really making NFTs usable, right? I mean, NFTs were a big trend in 2021, but, and then it died off and then came back a little bit. But I think with this tokenization, I think we'll really see tokenization of assets. We'll really see the real use cases of NFTs, I think. Let me ask you two things actually. So are you buying assets yourself? So it's not a marketplace. It's not the third parties, people are coming and listing their assets. You're buying yourself. And then are you the one tokenizing it?
Yes. So basically, yes, it's our initiative to say, okay, those assets are interesting. And we started with gold because we saw a trend and we started to purchase gold, I think, below $3,000 an ounce. And today, just make the maths. We are over 5,000 already. I didn't check before the call. Silver also went to the roof last year and even now, platinum as well. And so, yes, so we purchase it, we put it on the platform. For now, we are not doing tokenization for other or third parties. This will become something, I think, in the coming years. But something I wanted to add, and which is quite important. Of course, the NFT craze that we know from 2020, 2022, let's say, and it's one of the bubble that bursted. There are a few reasons for that. And I think the reason was because basically you were trading or buying some assets or some representation of an asset that is just an image. It was not backed by anything. There was not real value behind it. So if you found someone to buy it for more expensive than what you purchased it, good for you. And the story could continue till a certain point and then it fall apart. I think in our case here, to tokenize commodities, you have a real value behind. There's a real diamond or gold bar or silver bar somewhere in a vault, not somewhere, in a vault in Liechtenstein. You have that NFT, and that NFT, I'm looking at it much more as not as a buzz or trend words, but it's an ownership deed, and that's important. That ownership deed is fully enforceable by law in Liechtenstein, which means if we tomorrow don't operate anymore as a platform, but you have that in your wallet, you could go to Liechtenstein in front of a court and they will give you that asset because it belongs to you. So the platform is fully decentralized and you hold your own assets.
Why don't we actually jump on straight onto the demo and get to see the platform?
With pleasure. So I'll open my screen here. Give me a second.
I can see your screen. This beautiful diamond sitting there.
Exactly. So just basically we have diamonds, as we said. Here you have silver, gold, and at the same time we have live pricing. So this is connected to live pricing through Chainlink. You have the live price, so it's just below 5,100. Silver price as well, platinum, and so on. And basically, when you scroll down, you can see the difference. That's gold here. But let's say I'm going to silver. And I can choose, for example, that asset, which is Toto Silver number 61. I'm clicking on it, and you are really like on a real e-commerce platform where you look at the assets, You look at the overview, you know that it's Swiss made from this manufacturer, LBMA refined, so London Metallic Association, so it's certified. It's 1 ounce, so you have the weight of the asset. You know it's pure, nearly pure, like 99.9% purity, etc., etc. It is stored in Liechtenstein and insured by Lloyd's of London. I'll see here, you have that certificate of the LBMA certificate, and once purchased, you will get LCX certificate, which I'll show you in a second. Basically, what you can do here, you can look at other data products, for example, and here now that asset was not purchased yet. But let us go to maybe assets that were purchased or redeemed already. No, so so this one was not redeemed, but let's say I'll take
This is not a test net, right? Like typically in crypto, you get to see test nets. This is actually working application, and you've sold actual assets on the platform, right?
Absolutely. So I'll show it to you here. So for example, this one, Toto Silver 13, was sold at $55. So we can see it here. It was bought on the 15th of May, 2025. And if I look at the transaction, so basically here, it was sent, so the token ID and these assets, and click on that as well if you want. So it's this asset was sent to the user, purchased it 200 and something days ago. And basically that's the transaction. Now to go back to our story, if I look at the asset itself, as I said, you have the LBMA certificate. I can open it. Here, you see that the company is legitimate from the LBMA, so Argos Aureus, where the asset was refined, is here. And a second certificate, the LCX certificate of ownership. And that's the LCX certificate of the asset. And basically, this is your ownership deed. So it connects your asset, silver, number 13, with token ID 262 on Ethereum blockchain. And your rights are, this is the ownership rights of a 1 ounce silver bar produced by this refinery and represented on chain with the stamp of the physical validator of LCX, the Lloyd's, and you have a QR code that redirects you directly that page. Now, we have the same for all the other assets, and I can go into diamonds as well, where you see all kind of diamonds. So for any kind of budgets, but let's say I want a round diamond, let's say a small one of, I don't know, like maybe 80 points. It's quite small. And for a budget below, I don't know, $300, yeah, I have a few still. Let's say this is at $180. And now how to get there? So basically, I'm just gonna empty my cards.
Yeah, I was going to ask you actually a few things, right? Like I think we'll go through the purchase process also. I want to see how you buy one. But before that though, where is this content coming from? Right? So with NFTs, like the craze you talked about with the images, JPEGs, people created those, right? Then AI came along, AI created those versions. How do you actually go through the tokenization part of it or creating the digital twin? What is the process that you go through to get to this place when you have these, listings on the website?
So there are a few things. So first of all, it's a technological manipulation, let's say, or coding that we have to basically take all the information of the asset itself. As I said, I can take an example here of a Sapphire. You have a certificate. Here, I'll share it. And all the information about that stone, 2.04 carats, the dimensions, etc., will be put into the metadata of the asset. And so with all the information of the price of the asset, the quality, the properties, etc., will build basically that asset. So you have the asset, which is the ownership deed and the representation of a physical asset linked to that physical asset. And on top of that, you have all the data that can be viewed by anyone worldwide, and basically, look at this certificate and understand that this is the representation of that stone.
Yeah. So I guess I'm still trying to drill down into that point, right? So when you get these diamonds, right? I mean, silver bar. Let's talk about silver bars, right? All silver bars will be the same, right? And same with gold.
Correct and not correct. So the example that you start with silver, it's true. There's no serial number in those bars. For gold and platinum, every bar has a serial number. And so basically the asset is linked with his serial number. I'm going to check here. So basically here, for that gold bar, you have that serial number, 282669, belongs to you because it's a one unique asset. It's true for platinum, for gold, for diamonds as well. For diamonds, you have a GIA certificate. I'll just take an example. Here, let's say a redeemed one. So the redeemed one, sorry, you cannot see. So all the redeemed assets were already redeemed by the user. So we send it to the user, they have it at home. And so basically here on that GIA certificate, I'm just going to show you how it looks like, but you have a GIA report number. That's the number, 630, blah, blah, blah. It is engraved into the stone, by the way. And that same number, so let's say it ends with 9055. Let's see if it's true. If on the LCX certificate, it's here, and it ends with 9055. So it is really linked to that specific asset.
So let's talk about custody. I guess that's the question I wanted to ask you. Let's talk about custody, because obviously with with physical assets, custody has its price, but also custody is very important, right? For physical assets, right? From safety perspective, but also just having to have the asset, right? So who's doing the custody?
So we work with a third party, very well-known custodian in Liechtenstein. You can compare it with a bank. When you come to a bank, you can purchase or rent a safety box. And it's the same over there. So we have one under the name of Toto Finance. And basically every user, it's a segregated account. And so everybody who owns an asset owns his own asset into that vault. And as I said, we give, so this NFT is that ownership deed. And it is like it's used in real estate or in other industries, that asset really belongs to you. So you can always prove that's mine and it belongs to me. So ultimately, if you want to redeem it at a certain point, you will always be able to redeem it if you can prove that you are the owner of that asset.
I see. So third party that's proven, you pass it on to them. They do the custody. When people want to redeem it, they just have to go there, or somehow you work with you guys to get the asset to them.
We work with them and we ship the asset then to the final user.
I guess when you're talking about crypto, right, you have to talk about rehypothecation, right? That's a big issue, big no-nos. And, that has happened. People have seen this in other financial assets where the same asset has been rehypothecated, right? We're talking about private credit. We've seen a lot of stories come out on private credit recently. What are the chances that assets could be rehypothecated? Because redemption will be very little, right? Like only a few people will try to redeem these.
Yeah, I think redemption occurs for around 5% of the total users, as what we saw from the last 3 years. But basically, I think, as I explained as well, so it's a fully decentralized platform. So when you own an asset, we are not custodians of the assets. So basically, you own your own wallet. You are master. You are the master of your keys, master of your assets that are in your wallet. So we have no power to do whatever with that asset once it has been purchased by someone. It belongs to someone else. The ownership has been transferred to that person, to the new owner, and nothing can be done. I cannot rehypothecate that asset. It sits in the vault until they want to redeem it.
I see. Once these NFTs are there on the platform, then people can trade on the platform, I'm assuming, as well.
Yes, and the beauty, I think, and that's the beauty of the system, is you are not obliged to stay on our marketplace. You could trade it outside. You could go to OpenSea, list your assets, and sell it to you, for example, or gift it to someone. If really you want to gift a diamond to someone for Valentine, for example. By the way, we had a beautiful Valentine collection, but you are totally free to decide what you do with the asset. Either you hold it, you keep it for your children or next generations, or you gift it, or you send it, or you want to sell it, or you put it on auction. So we give also or direct sale or auction possibilities, or ultimately you redeem it for yourself. And so those are the different
I see.
possibilities.
So is there reselling happening on the platform right now? Like on the Toto Finance, people are starting to sell? Because obviously, someone who bought silver for $55 might have tried to sell it when it went to $120, right? So has it happened? Have you seen some those trends?
We saw a little bit of that, and I agree to say with you, the craze is maybe a bit lower than 2 years ago or 3 years ago, but I think it will come back. People who hold those assets that are real and you can prove that you are the owner of it, there will be a time for that. We all waiting for mass adoption, so that's why we have that platform. It's a beautiful platform working for real B2C, like end users, customers that want to be exposed to those kind of assets. And the beauty as well, I think you can be in your sofa on a Saturday evening after a movie and you want to pleasure your girlfriend or boyfriend or whoever sits next to you, you just pop into the platform and you purchase an asset. And I think this is not possible in traditional world. The shops are only opening at 10 a.m. on Monday. So a lot can happen on a Sunday,
Again, this is beautiful to see actual assets sitting on the platform, assets being bought, redeemed. I think it's a great story. And I can see how much additional liquidity it brings to the system, right, of this commodities, once obviously it starts to pick up steam. So why don't you quickly show us how to buy one of these assets, if that's possible?
Yeah, so I'll show you first how to connect. It's quite simple. So basically you have to sign in. I'm typing my email here. And I'll get an immediate code through email. Let me get it here. And I'm entering my code and I'm in. Okay, so I'm here connected as a user. I have an account where I can see, but obviously now I didn't purchase anything, but you can see your activity, your referrals, wish list, and so on. But let's say I want to go and buy some silver today. So on sale, I'm adding it to my cart. Then I go to cart like on a regular e-commerce platform and I see the assets here. So that's the assets. And let's say I want to proceed to checkout. So I'm clicking here and we will be having other means of payment in the near future. So pay with Apple Pay or credit cards or PayPal and so on. But now we give the only possibility through crypto. So you can use either Tether, USDC, or you can use Cardano as well. So we deployed on Cardano as well. Important to say, but let's say, okay, I want to pay this. I connect my MetaMask. It opens up here. I'm connecting in it. And my wallet is connected. And so basically here, I can say, okay, I want to pay here for that asset. I will not purchase it now. Let me show you. So this one who was sold, I can show you what happened. So basically when they clicked on that, you see that the asset was minted on the 15th of May. There was a transfer. So here is where we can see the transaction. I'll share it here. So the transaction occurred where we received the funds and the asset was sent to that user, this asset. So if I go to that user, we can see, I cannot see the inventory here, but basically Let's say this asset, for example. So we can see here who holds it, when it was purchased, and so on.
Right. This wallet holds a lot of silver, it seems.
Smart guy, I suppose.
That's cool. Good to see. Obviously, you can see other assets as well if it's connected to the same wallet. So that's great. Now, on the platform front, anything we haven't seen? Because I do want to talk about quickly about the blockchains and how it's all possible. But anything on the platform front that you haven't showed it to us?
No, I think for the B2C platform, which is this is the Sapphire, like $61,000 for a 8 carat stone, beautiful stone with GRS certificate, which is one of the most famous one, 8.19 carats, and you have all the comes from Sri Lanka, like I said, natural sapphire, non-heated, so that's quite important for those assets. And this is our this is our B2C platform. We now have, as I told you in the beginning, we have a B2B or investor portal as well, where we give the opportunity to businesses or institutions to invest into commodities, but in a different way. And this is what we are about to reveal. But for you as an alpha, and we started talking about it a bit, but we are tokenizing in-ground assets of mines. Like I said, very capital-intensive industry, and we are basically linking mining industry or mines with investors. And we give to the miners the possibility to get investment quite early in their journey in order to finance the production and extraction of the assets. But at the same time, we have an opportunity to investors to be exposed to commodities, and in this case, we're talking about a copper mine, to be exposed to copper very early while the asset is not extracted yet.
That's a beautiful capital formation right there, I think, or bringing liquidity to that market that doesn't exist right now. We've seen the functioning of the app, all the amazing assets you got. So on the blockchain front, like what are the blockchains you've got integrated with right now? I saw, obviously, we talked about Ethereum, we talked about Cardano. So how you chose those blockchains and what you're looking from a blockchain?
Yeah, so basically we started on Ethereum back in the days. I think it was the go-to chain, let's say, at that time when we started. And it was tokenizing there. There was, and still obviously today as well, there is more liquidity. And obviously everybody is attracted to that. What we are seeing now, so we are seeing a lot of chains, of course, saying they are the new RWA chain, or they want to attract those kind of businesses because they understand there's a big value to attract those projects to their chain. So we are being, solicited by a lot of players today. Not to name them, there are many, and they all want to play a role over there. We see it, and if you look at the big players in the financial asset tokenization, they're already deployed on 7, 8, 9, 10 different blockchains. This is also what we are probably going to do in the future. For now, we did a project. So we were the first tokenization project on XRP. So we were really the first one before everything. So the first project, and it was a collection of diamonds, and we sold out, like, I think in a few hours. Quite crazy. We did the same on Cardano. We did the same on Solana. We did the same on Polygon. And I think the first mover advantage is always great. And we got some very good feedback from that. Now I would tell you, and I always compare it with what we're using in traditional world. So when I'm looking, and I'll give an example of AI today, when you are typing a prompt in AI, you don't really care, or for the non-techies out there, they don't really care what's the way they're calculating your response or what they're doing behind the curtain. You want your answer and you want it straight away. And I think with blockchain, this is what we will be getting in a few, hopefully very soon, but less talking about technology because people don't want to listen to technology. They want a solution. And if it's easy to connect either through wallet or not through a wallet to purchase an asset, to be the owner, and that everything is legit, I think it doesn't matter on which chain it is. It has to be functional, fast, and easy to use.
So that's been amazing, man. That's been amazing discussion. So let me ask you this last closing question, right? So tell me, how big is the commodities market, and how big you think this commodities tokenization market will be in 3 to 5 years' time?
Okay, so today we're looking at 7 billion market in tokenized commodities. Basically, only tokenizing the majority of that are two companies, Paxos Gold and Tether Gold, tokenizing only one asset, gold bars or gold. By the way, quite complicated to redeem your assets. If you have a Tether token, you need basically to have, I think, 13 kilos of gold in order to redeem it. So I think what we are offering here is quite more attractive for users. That's one. And so the 7 billions are 4 billion of nearly 5 billion are held by those companies. So I think the rest basically is coming is coming fast behind. And I think the market will go, of course, by way of speaking, I think when after the call, check the market size, it should have been growing already last hour. And I think what we are bringing to the table here by tokenizing in-ground assets, and we're talking about copper, which is a very attractive commodity at the moment. Just maybe a few words about that. What we are doing now, we are tokenizing. Basically, it's a $5 billion dollar amount of copper that we will be tokenizing, hopefully in the next quarter. And so, if we do that, basically the commodities market will already grow nearly by 2. And I think this is what we are looking to see in the coming months, in the coming years, more and more projects tokenizing more commodities, from oil to copper to rare earth assets and stuff like this. So I'm really looking forward to have the same discussion in 1 year from now, and we will look at totally different numbers already.